scan the QR code over here, just press a subscribe, right? Then you become a subscriber. Okay, so let's get started. Right? Okay, very good. Now, let me just do a very quick intro, right, of how this US case study came about. I know for weeks I've been talking about this, but I don't know who is viewing, you see. Okay, so right now we have about 141 people who are watching this YouTube live. If you don't mind, right, don't mind. For those people who are our graduate, can you just type what lah? Now, if you're not our graduate yet, no problem, right? Can you just type no? You know, no, that means you're not our graduate yet. Yeah, if you're a graduate, can you just type what lah? H-U-A-T, right? Anyway, next year, Chinese New Year, So the more you type, the luckier you get, right? The more what you get, right? Okay, so just type what. Let me just practice my... Okay, so I typed what already. Yu Kai say okay. Okay, that means you should be our graduate. Okay, so you just type, right? Because there's a few delayed response, right? So let me just get started while our grad type what and then our non-grads, you just type no. Now, this US case study started last year, right, in April. And I remember very clearly in April, right, because that was the very first time, I think, the nation, including myself, right, we kena this thing called a circuit breaker. No. Okay, good. Yeah, Daryl say, what are? Okay, it's fine lah, like we will not discriminate you, right? Okay, so where was I, right? Yeah, the US case study started last year in April when our Prime Minister Lee called for a lockdown or a circuit breaker. And then during this time, we're stuck there for 1 month. And then subsequently, the government announced an extension to the second month. So this 2 months, we cannot do anything. We cannot run training, cannot do anything, right? So that's when we started this US case study program, right? So that when you're stuck at home, you can actually make money by investing in companies. But investing in companies is not so easy, as in, today lockdown, today suddenly become an investor, right? You still have to go through the journey of figuring how to invest and so on, and it takes time, And then during that time, we cannot run training, so it's impossible for us to teach anyone to do training, right? So what we did was we came up with an idea of why don't we do analysis for people, who doesn't know how to invest. So at the same time, we give them some idea about what investing is all about, and then we also share with them, like as a community, right, what are the companies that we are looking at, And then that's how we started this project called Project US Case Study. And then at the same time, we also do Project SG Case Study. So we have case study analysis for both the US market as well as the Singapore market. Wow, so majority is our grad, which is fine, right? The no one, which is also fine, Then, of course, once we do it, it's quite in-house, it's quite internal, right? Nobody knows what we do. So we decided to share with the public. So the very first time that we do this live via Zoom, not via YouTube, right? It was on the 24th of July. And this is 2020. 2020, right? So Dr. Naresh, which is one of our grad, decided to share one company, right? And the company is called Equity Brand. Equity Brand. If I remember correctly, I think since the sharing until today, the share price will have gone up by maybe about 100%. 100%. So for those people who joined to become a subscriber in the very early stage, right? That was the beginning of the pandemic. I think you were hot big time. Until today, you should be very close to the moon already. Very close to the moon, right? So that was Dr. Naresh, right? Then subsequently, we realized that people really want to know how to invest, so we decided to share more. So every month, we decided to share more. Then, of course, July, September, August, all that. And then on 16 October, right, we invited Alice. Alice is our regular author that share about case study analysis, right? And then her professional job is accounting. So which means that she knows all the accounting stuff. So she also did many of our case study, right? And then recently, OCBC. OCBC kena this phishing scam, right? A phishing scam. So we find this an opportunity, and we find this an opportunity, and we intentionally want to do a case study on OCBC, right? Because we, every time when there is a bad news on a good company, we always want to do that case study. Just my personal take. I think my general view is I don't think OCBC, DBS, or UOB, right, share price is going to go to zero. I don't think that is going to happen. So in other words, if right now there's some bad news and people start dumping stock, right, it could be a good time. Or it could be a good time. But before you put your money into OCBC, right, the key thing is we also want to know exactly what OCBC does for a living. So I think she just did this presentation, I think early this morning, 9 o'clock, she just did this, right? So in fact, we do a lot of things so I think in total, right, we went to the universe, it's like universe, right? and then we have screened about 54 companies. So far, our database have 54 companies. Yeah, then subsequently, of course, more authors came on board. Wicked, right? Wicked talk about one company called Ingalls Market. Yeah, Ingalls Market. Ingalls Market is like Sheng Siong, Ang Mo Sheng Siong, right? Yeah, so many other companies. Many companies. So let's talk about today. So in other words, our database right now have about 54 companies. And this company that we're going to share tonight is an add-on to the 54 companies. Now later, I'll share with the 161 audience who are watching this how you can get access to all this database that we have that's collected over the past 2 years so that you can what next week, which is our Chinese New Year. Yeah, so the company that we're going to talk about is a fast growth, right? We're not interested in slow growth. It's a fast growth pharmaceutical company called Supernus. Supernus. Now, I don't think most of you have heard this company before. Pfizer, you will know. Then maybe Moderna, you will know. All the big companies that you will know, right? But big companies are usually slow growth or medium growth. But we're looking at the supersonic one. Supersonic. So we found this Supernus company maybe about 6 months ago, right? 6 months ago. But since it's a pharmaceutical, right? So sometimes it relates to medical, and then when it's medical, sometimes it's a bit more complex, right? So maybe to help our author, I just help him do some intro, play some video, right? So that when our author came on board to explain, I think the life for him, right, and all of you will be much easier. So let me just introduce very quickly about this company, right, Supernus. You can always go to the website called supernus.com, look at the commercial products. But whatever, since the pharmaceutical company, whatever drugs that they are producing, right, it has to solve some medical issue. Now, let me share with you the 4 medical issues where their drugs are helping to treat. The first one is epilepsy. I think this one you know like fits, right? Fits. So migraine, very similar to headache, right? Yeah, migraine. Now here it appears like a small thing. I mean headache, so what? Can you imagine if you have migraine or headache every day, every moment? Then it becomes a problem, right? Then the third illness they're going to treat is Parkinson's disease. And the last one is ADHD. Yeah, so initially when I see this, I was thinking if I want to invest, how do I come up with a simple acronym, right, to remember? But before I share with you the acronym, maybe I share with you what is a Parkinson's disease. You have heard about it, but in detail, right? If you go and Google, it's actually a brain disorder that leads to eventually the shaking, stiffness, then got problem walking, like balance, coordination, and so on. Yeah, so usually the symptoms begin gradually, and then over time become worse and worse. Yeah, if you cannot walk, you cannot talk. I think your quality of life will be greatly diminished. So that's Parkinson's disease. ADHD, I think you've heard, hyperactivity disorder, right? Now, so moving forward, let me share with you a small acronym, right, so that you know tonight what are the treatment that the drugs of this company is helping to resolve. Now, so just remember this PAM, right? P-A-M-E, PAM. PAM, P is Parkinson's disease, right? A is ADHD, right? So M is migraine, right? Then E is epilepsy. So later on, when our author shared, right, he's talking about drugs that solve this PAM. Parkinson's disease, ADHD, migraine, and then epilepsy. Okay, so out of this PAM, right, P-A-M-E, they make most money or they sell most drugs or their profit are most derived on P-M-E. Like SME, small medium enterprises, so it's P-M-E, right? So let me just show you this drug right now. These are the series of products that they have to solve the P-A-M-E, right? Okay, so do you see the E? Epilepsy, right? So there are 2 drugs, Trokendi, right, and Oxtella, okay? And the other one, M, right? So we have E, right? We have M, right? Migraine. So interestingly, the same drug also help to resolve the migraine issue. Yeah. So remember, then the next one, right? The makes more money is P, right? Which is the Parkinson's disease. So the drug is called Apoquin. Now the challenging thing about trying to invest in a pharmaceutical company are the, most of us are not like biomedical trained, right? Now my degree is in biology. Even for me, I find this one is a bit tricky. So what I'm going to do is I'm going to explain to you some layman, so later on when author comes, it's going to make things easy, right? Now, so what I'm going to do is I'm going to show you some videos, a visual, right? Visual about patient testimonial about those people having epilepsy, having migraine, having Parkinson's disease, and then they take all these drugs. How does it help them? And of course, at the end of the day, I think you want to collect businesses, right, that does good for humanity. Okay? So let's show you very quick the products, right? You know, just now we talked about Trokendi, Oxtella, and Apoquin. Now, in 2021, which is just last year, this is their total sales, 145.5 million, right? Million is their small company, and then 55.5%, right, of their sales come from this Trokendi, right? 20% come from the Oxtella, and then the 16.9 comes from Apoquin. So if I add these three, you realize it's almost all, it's 92%, or rather 93%. So just remember this number, right? 93%. Yeah, so if you want to invest in this company, let's understand the top three drugs that help to save patients in terms of migraine, the PAM, right? PAM. So let me start from the first one. The video will be about 1.5 minutes to 2 minutes, right? Yeah. So that when you invest, you feel good that you know what you are doing, okay? So the first issue, right, is migraine. Migraine. So remember, the drugs, right? The drugs which is Trokendi over here, right? It helps with this illness called migraine, and it also helps to solve a certain types of seizure. So one drug solves two issues, right? So I'm just going to escape for a short while, and then I am going to share screen for the internet, right? Yeah, and then you hear, you know, from the patient themselves, right? So let me just enlarge this screen first, and I make sure that when I share, I can share the sound, right? Okay, so here it goes, about 20 minutes, the first drug treat illness. So remember, this video is sponsored by Supernus and so on. So here it goes.
When my daughter was younger, that first time that she looked at me and said, "Mommy, do you have a headache? I want to play," I was devastated. The headaches I was experiencing were making me miss out on spending time with my daughter. When I was told what my condition was, that I had migraine headaches, I was miserable. My doctor and I started talking about different preventative treatments, and the one at the time that was available was Topamax. It did work. However, I started experiencing some side effects. I threw up for maybe a week, and I had some strange vision things. My favorite foods didn't taste like my favorite foods anymore. Even though I had side effects with Topamax, I kept with the treatment because I think it was definitely worth it. At a regular follow-up with my neurologist, she told me she thought I'd be a really good candidate to try a new medication, Trokendi XR. My doctor and I discussed the possible risks and benefits and side effects of Trokendi XR, and based on the conversation, I definitely wanted to give Trokendi XR a try. What I really liked about Trokendi XR was that I was taking Topamax twice a day, and switching to a once-a-day pill was pretty exciting. I still experience some side effects, but for me, they are manageable. Extended release Trokendi XR works for me, but this is just my experience. Since being on Trokendi XR, I've been really happy. I know that when my daughter has a game on Friday, that I'm most likely going to be there on Friday.
Additional important safety information.
Okay, so this is a very short video, and then of course they have their own disclaimer, right? It's on this drug called Trokendi XR. Trokendi XR. So that is the one of their drugs. So let me just, I'm going to toggle this for a short while, right? Yeah. So this is the first drug, which is called Trokendi XR. Okay, so remember they treat two illnesses, right? One is the migraine and one is a seizure. And you may notice that this drug alone contribute to 55% of the entire company's sales. Now, just to let you know that even though my background is in bio, I wanted to avoid pharmaceutical as much as possible, right? Because to me, I just find it's too complex. Yeah, because the drug got different phases of development, it's really too complex. And why I find this Supernus interesting, right? For a few reasons. Number one, they got a few drugs. It's not like hundreds drugs, right? And I have to go and track what is this 100 drugs. And because there are only a few drugs, it's easy for me to remember. And then, you know, the illness that they treat is very easy, like PAME. You know, so 4 things instead of 40 things, right? Yeah, so if it's simple, I think maybe it's worth something to look at. So that is the 55%. Then how about the other one, right, which is called Oxtella XR. So there's Trokendi XR and then Oxtella XR. So these are about 20, contributed about 20% of the company's total sales. So let me just toggle to the web again, right? Let me just close this. And I'm going to play a video about the patient talking about Oxtellar XR, right? So if you look at the left side, it talks about seizure, how to help them with seizure, Okay, so here it goes, I'm going to play the trailer again. Okay, so here it goes, let me just enlarge this, right?
That's my mom when she graduated nursing school.
Throughout high school, she consciously didn't want to try to influence me into going into the medical field. So she was surprised the day that I came home from school one day and said, I think I want to go into medicine. I went to school to become a nationally registered emergency medical transporter, and as of this year, I will graduate with a degree as a paramedic. And I want to be there on the front line, helping those people who have conditions like me and who aren't necessarily understood.
When the partial onset seizures were first happening, we still didn't quite understand them. I knew that something was off. The best metaphor that I came up with was if your whole computer just crashes. And then when you boot the computer back up, it's trying to figure out where it left off. When I would wake back up, I would recognize a specific sensation I would get in my stomach and a weird kind of headache. I was sent to Dr. Wheelis, and he immediately knew what I was talking about.
If I just get kind of like a rising feeling in my stomach and feel a little off the last 20 or 30 seconds, I mean, I'm not going to necessarily think, oh, that's a partial onset seizure. I may think, oh, was something I ate? That is a stomach problem. We felt as though our seizures were coming from our left temporal lobe, so we did have to proceed with our diagnostic testing.
My lovely dog, Sky, would come visit me at the hospital. Every time I would have a partial onset seizure, she knew exactly what was going on. She would lean up against me, wouldn't let me out of her sight, because she knew that something was a little off. There were other medications that we tried, and Dr. Wheelis switched me onto Oxtellar XR. I know there's potential side effects, but Dr. Wheelis and I have talked about them.
Grace has done great with her partial onset seizure with Oxtellar XR. She's been seizure-free since being on it.
So now I take Oxtellar XR once a day, and I'm gonna keep taking Oxtellar XR because it's doing its job. Just because one person found a treatment for their condition and it worked for them doesn't mean it's gonna work for everybody. But Oxtellar XR works for me. For so long, I would come to see Dr. Wheelis because, well, we had another breakthrough seizure last night, and it would be not necessarily the most pleasant tone. But now I get to walk, I get to strut through those doors to Dr. Wheelis and say, I'm still doing well.
Important safety.
Interesting, so this is Oxtellar. Just one more video, right? Just one more video, right? So, I mean, when you listen to them, wouldn't it be nice if you invest in a company, or you own a piece of company, or you collect a company that really help to improve lives of patients who are suffering? And then that lady is quite young. She's like teens, right? So the last drug, right? Which takes up about 16.9%, right? Over here is Apokyn. Apokyn. So let's show the video again. So remember, Apokyn treats a very serious form of disease called Parkinson's disease. If I remember correctly, I think there was an actor called Michael J. Fox, right? Is it Michael J. Fox? Michael J. Fox from the movie called Back to the Future. Anybody, can you just comment? I think he has Parkinson's disease, if I'm not wrong. Michael J. Fox, right? I think so, if I remember correctly. So for those people who are watching DVD, almost 200 people. Can you just help me track the Michael J. Fox for the movie Back to the Future, right? Is he suffering from this Parkinson's disease? Don't mind, just help me check, right, while I play this video. Apokyn. So let me just enlarge this, right? This one, cannot enlarge. Okay,
I love the reliability and the dependability of Apokyn. I can take it with me anywhere. I can take a shot in the car, not when I'm driving, in the hotel when I'm on vacation, just about anywhere. I also love that I can carry it with me in my bright yellow sunglass case. I can find it at the bottom of my handbag. I just love the way it gives me more confidence to be able to do the things I want to do and go out when I want to.
Apokyn doesn't disrupt my day. In fact, it actually makes my day. I can stop an off episode in its tracks, which is one of the things I really like because it's quick and it's reliable, and it helps me get on with my day and back on track.
One of the characteristics of Parkinson's is a reluctance to be out in public. This can be a real problem for somebody, and it tends to isolate you. But with Apokyn, it provides the relief you need. It's reliable, and I found it to be a wonderful tool in my toolbox of fighting Parkinson's.
I love the convenience of Apokyn. It fits into my lifestyle. It's portable, it's easy to inject, and when you're having an off moment, you just inject yourself and you're able to go. Now I can travel, I can go out with friends. That's something I couldn't do before. Now with Apokyn, I just inject myself and then I'm able to enjoy my friends and family outside my house. I've now gone back to my dance class and I'm able to feel the music.
Apokyn works for me. It's extremely convenient. I keep one and I take a pen to the gym. I keep one in my car. I have one at the office, and of course I have one at the home. I tend to take Apokyn every morning because it gets my day started in the right way. It's done tremendous things for my confidence. I'll take a shot if I need to be at work, and it helps me get through meetings and be much more effective with my work. And the most important thing to me is it's really helped me keep up with my kids. I have 4 young kids, and to keep up with them is the most important thing for me, and Apokyn does it for me. It's extremely reliable and extremely convenient.
Apokyn.
Good. So I'm done, right? I'm going to stop share, and I'm going to before I hand over to Zhen Hong, maybe I help him, right? Because I'm supposed to read the disclaimer, Disclaimer, right? Sorry, let me just put this up. So I'm going to save Zhen Hong effort, right? Okay, so let's come back to this slide. Just 30 seconds, I'll just finish. And right now we have introduced the 3 drugs, the 3 more profitable drugs, right? Which Trokendi XR, Oxtellar XR, and then Apokyn, right? Apokyn. So in the next few seconds, I'm going to bring Zhen Hong up, right? And thanks to the audience like Jocelyn and Boon Hua and Naresh, so they have confirmed that Michael J. Fox has Parkinson. Now, if you're my generation, you will have watched all the 3 episodes of Back to the Future. Yeah, Back to the Future, Michael Jackson, I also want to say Michael Jackson. So Michael J. Fox really is going through, I can't remember what stage of Parkinson. And wouldn't it be nice if this Apokyn and really help him? And of course, other patients that's suffering as well. So I'm just going to read this disclaimer. Disclaimer, right, so that you know what's our purpose of tonight's case study. So let me just put my pen, right? So the purpose of this evening case study, remember, is solely to illustrate the application of value investing. So interesting, through some investing methodology, we can invest in companies that really helps humanity. Like this company called Supernus, and various valuation methods in the context of real-life companies like Supernus, for the purpose of continued learning of value investment methods and investor education. But remember, right, under no circumstances does any information provided in this evening case study represent a recommendation to buy, sell, or hold any stocks. Now, our intention is to really provide illustration, right, to demonstrate the application of value investing principles. And it doesn't take into account, all the 200 of you, right, individual characteristic profile or the risk appetite of any given investor. So remember, in no events shall VIA or any author, which is Zhen Hong, right, be liable for any viewers, guests, third party, for any damages of any kind arising out of the use of any contents shared in this evening, including without limitation. Quite serious now to read this whole thing, right? Use of such content outside its intended purpose of investor education and any investment losses, loss profit, loss opportunities, special, incidental, indirect, consequential, punitive damages resulting from such unintended use. So remember, neither My Kinesis Investment Private Limited, nor Value Investing Academy, nor Zhen Hong, right, of this evening's case study operated by or affiliated with any broker, dealer, or licensed financial advisor. So last one, past performance is a poor indicator of future performance, right? So again, the information in this presentation is not intended to be, nor does it constitute investment advice or recommendation. So remember, neither VIA nor the authors make any representation or warranty to the completeness or accuracy of the information shared in this case study. Finally, I'm done. So
I'm ready. So, good evening, everyone. My name is Zhen Hong, and I'm from VIA 32. So, coincidentally, today we're going to share with you guys this company called Supernus Pharmaceuticals. It's listed on Nasdaq. Ticker symbol is SUPN, and coincidentally, it's in our US case study number 32. So today I'm just going to do a simple update on the company. Okay. For more info, please subscribe to the case study. Please subscribe to the case study and you know, go through the case study, and the author has done a perfect job. Okay, so for this update, right, what I will be using, right, is not is the official results until fiscal year of 2021. Okay, as well as because 2021 for them has not been completed in the financial year lah. So I'll be using the Q3 results, and all these Q3 results I'll be taking them in the form of trailing 12 months aggregate from aggregate sites such as Guru Focus, and this is to simulate the final year of 2021 lah. Okay, do take note this is a simulated number, but not an official number. So official number, you probably have to wait for another 2 to 3 months before it is released. Okay. So to start things off, we were going to ask ourselves 4 questions as usual. What is the company all about? Where do they do their business? What type of company it is? And what are their future plans? Okay. So for the first question, Supernus is a biopharma company, as what you can see from what Cayden has presented previously, and also from the videos, right? Okay, they develop and market specialized product to treat diseases of the central nervous system, or short form CNS, which comprises of the brain and the spinal cord. Okay, they are the main organs that coordinate signals for movement, decision making, personality, etc. And that is why just now, if you have seen the video, their products mainly target things that diseases that hinder movement, such as Parkinson, diseases such as hinder decision making, such as migraine, and also epilepsy. Okay, then for this company, yes, even though it is listed as started in 2005. Okay, however, its history is very long. Okay, they started off as being called Shire. Okay, in 1997. Then from there on, in 2005, okay, they changed the name to called Supernus Pharmaceuticals. Okay. Now, as for product, say Cayden has already shown to you guys prior to this. Okay, these are their main categories. Okay. Then the lead products are in epilepsy, migraine, and also just now Parkinson, Apokin. Okay. Now, according to their latest quarter report for fiscal year 2021, the Q3 results, okay, both Tocilin XR and Oxtella XR continue their reign as the top selling products for Supernus. So you can see the numbers here. Okay. Then do note that this product called Qualitative, okay, it only recently granted the NDA, new drug approval by the US Food and Drug Administration, FDA for short. Okay, so basically this is the new product. Well, these two, including Apokin, they are top 3 ranking products. Okay. Now moving on to where do Supernus do their business, right? Okay, this company Supernus mainly operates in the US market. Although the management, according to their annual report, state that there are strategic partnerships overseas. Then this is evident from the presence of overseas patent, which we will pay a visit later on during the moat segment. So during the moat segment, we'll talk more about patents. But for now, this is what you need to know. Okay. Then in terms of sales, okay, it mainly comes from a trifecta of clients, namely Amerisource, Virgin Drug Corporation, Cardinal Health Inc., and McKesson Corporation. So these 3, right, they have a combined sales attributed to more than 85% of overall sales. Okay, so what are these clients and what exactly are them that so much that Supernus mainly concentrate on these 3? So these 3, right, collectively they are essentially wholesalers, specialty pharmacies, distributors, aka giants in their respective industry. So what they do is, what Supernus do is they sell to these 3 companies, okay, and these 3 companies in turn sell to the rest of the world. Okay, and this is how Supernus extends its reach. Okay. Now, after that, we have the type. Moving on to type, right? According to value investing criteria, any company with growth rates less or equal to inflation is slow growth. Any rate above inflation but less than 20% is medium growth. And any rate more than 20% is fast growth. So previously, the author of the case study has calculated the growth rate to be at 53% using our own in-house VIA calculator. Okay. Now, using the latest Q3 results and the trailing 12 months aggregate, we have gotten the growth rate to be about 32%. Okay. Nevertheless, right, regardless which number we take, okay, both of them are above 20%, and therefore Supernus is classified under a fast growth company. Okay. Then the bottom here is the EPS chart, which we will go through later on, but here is just to illustrate for this purpose. Then as well as dividend, okay, a note is that Supernus does not pay dividend. So this is basically a screenshot of what I got in their company's the FAQ page. Okay. Now, after type, we'll move on to the future plans. Okay. So for future plans, we cannot talk much about the future plans without highlighting pipelines. So pipelines are the line of products that the company has in stock and are trying to develop them for the future. Okay. So taken from the company's website, we have a handful of products currently in development. So one thing to know is that when we evaluate pharmaceutical companies or any similar industries, right, it's worth noting that product development in such industry will take years and significant resources. Okay. So despite that, right, there is always the chance of failure. Therefore, it is wise for us investors to take any product within the pipeline that is classified before NDA, before the new drug approval, right, as a pinch of salt. Okay. In a sense, we will try not to take categories like this into evaluating our company, evaluating the final valuation. Okay, simply because there is a chance of failure in all these different phases. Okay. Then on top of that, right, there is also a chance that even though the drug complete phase 3 trials, right, and they have already submitted the NDA filing, there is a chance that FDA will not approve such a drug. Okay, so these are things that us as value investors, we need to take note. Okay, so the bottom line is do not count the chicks before they hatch. All right. So here is another snapshot of the company's pipeline from their 2021 investors presentation. Okay. Yeah. So as you can see here, Qualitative, okay, they gotten the NDA in second quarter of 2021. That is why in the previous slide earlier on, I mentioned that it's a new addition to their products. Okay. Now, fresh from the 2021 Q3 report, we have 2 new drugs compound nominated for development. But remember, just now I mentioned that we will try not to count the chicks before they hatch. So instead, right, we can take this and we can flip the mindset around and think that these 2 nominations are basically the company announcing that its intention to utilize capital or utilize resources to develop these 2 compounds. So in the near future, we should see substantial resources allocated to these 2 nominations if they are granted green light for development. And also, there is a chance that the numbers will drop because they are going to spend a significant amount of resources on these 2 development. So these are things that we will need to take note of. Okay. Now, other than organic growth and advancement of the pipeline, right, Supernus, they also push for synergistic acquisitions. So in the same quarterly report, the management stated that Supernus has put forth an acquisition of this company called Adamas, okay, and it is to strengthen its Parkinson's disease portfolio, okay. So this is just a clipping to show that the company has pushed for such acquisition and it's proposed whether or not it's complete or not, we have to wait for further info okay. Now next, we will move on to moats, and on the moat, we'll look into 2 aspects, the qualitative aspect and the quantitative aspect. Okay, so the qualitative aspect will analyze it based on how well it can maintain its competitive edge. Okay, by using factors such as a different classification of the moat. Okay, so similar to most of the pharmaceutical companies, right, Supernus moat mainly lies in legal protection through the means of patents and trademark. So one interesting tactics employed by pharmaceutical companies, right, is that when a patent is very close to expiry, the company might engage in additional research and trials to either identify new ways to use the product or new formulation. So that way they can use the trial data to extend patent duration. So one classic example is GSK's Panadol. Okay, we'll always see new formulation. So based on that, based on this, right, most of the time GSK will probably use that to extend either their patent or their trademark. Okay. Then additionally, this Supernus also have trademark protection in US and international stages. So you can see their trademarks covered in US and international area. Okay. Then unfortunately, this is the only identifiable mode which could be a good or bad thing depending on where one view this notion. So Supernus do not do their own distribution. So good distribution networks or wide reach does not apply here, does not mainly apply here. On the other hand, as long as the patent is valid, right, the patent will supersede factors such as brand loyalty, because patent essentially grants the holder monopoly within the region in which the patent is enforceable. Okay. Then this concludes the qualitative analysis of the update. So next one, we'll move on to the quantitative portion, starting with the validation of the moat using ROIC and WACC. So right now we're going to validate whether this moat is strong or whether is the moat really present there. Okay, by using the two aforementioned factors. Okay, so ROIC, return on invested capital, WACC, weighted average cost of capital. So these are the two factors that we're going to look at when we validate the presence of moat. Okay, so value investing criteria states that ROIC has to be bigger than WACC for us to quantitatively say that moat is present. And the bigger the difference, the stronger the moat. So the image that we have here, okay, is taken from Growth Focus and the author. We can see that from 2015 onwards, right, the moat appears to be present. So right here, 2015 onwards, there is a moat because ROIC is bigger than WACC. Okay. Now, according to the author of the case study, despite all this, right, the gap seems to be narrowing, and even though it narrows, right, it appears to be stable. Okay, in the sense that there's not much of a big increase or big decrease, right, in recent years now. Okay. So to that, right, this is a pass in our value investing criteria, or at least for the fiscal year of 2020. Okay. So do take note, this 2020. We haven't had the 2021 numbers yet. Okay. So speaking of 2021, okay, here we have another ROIC and WACC chart, also taken from Growth Focus. The green bar represent ROIC, red bar represent WACC, and the black circle and line represent the difference. So the positive number means ROIC is bigger than WACC. Negative number is obviously the reverse. Now do not be alarmed as the chart shows a longer time horizon way back in 2009, as you can see here. So we will probably need to zoom into this portion here onwards. Okay. So in recent years, right, the difference between the positive number, the differences are positive. So that means the moat is present. Then the negative in the front portion could very well be due to the resource draining aspect of research and development, as all these returns are considered as late bloomers. So you can see the company probably would have spent a lot of resources here, and that's why there's negative return on invested capital. Okay. Now using the trailing 12 months of Q3 of FY 2021, the ROIC has once again dipped slightly below WACC. So you can see here, ROIC 8.8, and WACC is 8.91. Okay, so it's slightly below. So as per value investing philosophy, we would have to investigate and uncover the reason behind such a dip. So to that, we can scour the quarterly reports of 2021 and find the reasons. Okay. So in Q1 of 2021, okay, in the quarterly reports, the management stated that there is, or rather there were a couple of expenses undertaken by the company. The nature of such expenses can be said to be two reasons for the return to see significant fruition. Okay, so basically they spend money, but the return has not been seen yet. Okay, so firstly, the first spending that was listed, right, is this thing called the acquisition of US WorldMeds partners to expand their product range. Then the second explanation is that there is a development agreement with Navitor Inc., which back in the case study, right, the author mentioned that this was an exclusive option to license from Navitor. So within this agreement, right, Supernus has agreed to bear all costs of clinical trials phase 1 and 2, and the limitation is up to 50 million. Okay, after which the company can choose whether to acquire or license the product. So this is basically what the development agreement is all about. Okay, so it appears that Supernus is taking 2021 as the year of expansion or the year of internal investment. So basically they are channeling money into growth. Okay. So after this, we'll move on to, after finding out the moat, right, we'll move on to the graphs and the charts. So we start things off by looking at earnings per share. So earnings per share, or EPS for short, okay, it echoes what the author had previously presented. In 2015, it appears to be a decent start point, okay, because the rest are not very good and in negative. That is why, according to the author of the case study, okay, 2015 probably would be the year for us to take into consideration as our starting point. Okay, then from here on, it appears to be an uptrend and it looks relatively stable. So according to value investing criteria, EPS has to be on an uptrend. If not, it has to be stable. So to that, Supernus EPS checks out both of the boxes, and this is a pass in the value investing criteria. Okay, so do take notice 2020 again. How about 2021? Okay, let's look at it. So looking at the trailing 12 months for EPS of Q3 2021, right, unfortunately the EPS has increased significantly. So you can see here there's a decrease. Okay, and dictated by value investing philosophy, we have to investigate such a dip. Okay, so the formula is very simple: earnings divided by shares outstanding. Okay, so looking at this formula, right, there are two moving parts. And the question we need to ask ourselves is, did the earnings decrease, or did the shares outstanding increase, or in worst case scenario, right, both happen together? Okay, so let us investigate all these numbers. So the easier number to look at is always the shares outstanding, because it's the most straightforward one. So let's go into shares outstanding first. So for shares outstanding, from again taken from Growth Focus, you can see that the numbers appears to be constant over the last 3 years, straight horizontal. Okay. So to that, right, we can hypothesize that the decrease in earnings per share is likely due to the decrease in earnings and not due to the increase in shares outstanding. Okay. So to confirm this, right, we need to look at the earnings. So where to find them is usually in the income statement. Okay. So from the income statement of the Q3 report, Q3 2021 report, right, we can see that over the last 3 quarters, there is a slight increase in revenue, despite Q3 itself seeing a decrease. Okay. So overall, there's an increase, but Q3 saw a decrease. Okay. However, this is offset by the fact that the costs and expenses went up. Okay. And this led to an overall decrease in earnings for the 3 quarters. Hence, we can more or less hypothesize that the decrease in earnings per share EPS is likely due to the decrease in earnings on net income. And the reason for that is because costs and expenses increase. Okay. Nevertheless, right, value investing philosophy wants us to find out the reasons as to why there is such an increase and it again can be found in the same Q3 report. Okay. So for the increase in cost and expense, okay, under the cost and goods sold, the management stated that most of this cost is related to the royalties paid to acquire commercial products such as Apokyn and Zectago, okay, from US WM acquisition, okay, the aforementioned acquisition that was in the future plan, okay. Also, the management preemptively alert the investors that the current inventory for Qualitative was manufactured prior to the FDA approval. Therefore, investors should expect cost of goods to increase once manufacturing of that product commences. So basically, the management, they know that this thing is going to come, as in they're going to spend a lot of resources to manufacture Qualitative, since Qualitative is granted the rights of, given the rights to be marketed, so to say. And the current numbers the current Qualitative that they sell is previously was manufactured for clinical trials. Those are the remaining stocks, and that is why they preemptively alert investors, right, to expect such expenditure in the near future. Okay. So as for the increase in research and development, okay, the management explained that Supernus has made a one-time payment to Navitor Inc. for the option to acquire or license the product which both entities jointly developed as stated within the development agreement. So basically, this is like a one-off payment to Navitor, saying that, hey, you give me the option, or give me the permission to either acquire or license the product that we jointly that we developed together. Okay. So moving on to selling and general administrative expenses, right? The company stated that it was a result of two events. So one is the launch of Qualitative, which expenses were related to marketing, manpower, as well as engaged professional consulting services. So in essence, right, they need to market Qualitative since it's been granted selling approval by the FDA. So to that, the company need to spend money on such avenues such as marketing, manpower, and also to engage in consulting services, okay, on how to market Qualitative. Okay. Then the second event is the related acquisition of USWM and the products from the company. So it is also the reason for the increase in amortization of intangible assets. Okay. So all in all, right, we can conclude that the decrease in EPS is due to the decrease in earnings, which in turn was a result in the increase in costs and expenses relating to acquisitions and product launch. So to double confirm that, right, we can head over to look at how the aggregate size compile the data, and we can do a quick glance from there. Okay. So taken from Growth Focus, the good thing about aggregate size is that we can have a quick glance by looking at the tables and all. So taken from Growth Focus, here we can more or less confirm that the revenue and gross profit while the revenue and gross profit increase in tandem, right? The cost and expense increase in significant degree, okay, leading to an overall decrease in gross margin, operating income, net income, and margin. Okay, that's why you can see a lot of red arrows here. Okay. So this agree with our conclusion regarding the EPS, and one interesting point to note is that the reason is likely the main culprit to most of the decrease in Q3 2021 trailing 12 months number. So basically, it's because of all these increased expenses, and that is why the trailing 12 months Q3 number has a significant decrease. Okay. So after talking at all this, it leads us nicely into the gross margin charts. Okay, so value investing criteria for gross margin is that it has to be above 40%. If not, it has to be uptrend or stable. Okay, so the trailing 12 months for Q3 2021 is slightly smaller than 2020, but it's still well above the value investing criteria. So based on that, right, the gross margin for Supernus is a pass in that aspect. Okay. Okay, so after gross margin, we'll move on to cash flow. So cash flow, okay, value investing criteria detects that cash flow has to be on an uptrend. If not, it has to be positive or stable. So both operating cash flow and free cash flow for 2020 are on the uptrend since 2015, and this is a pass in the criteria. However, in the 2021 Q3 interim number, right, we saw that operating cash flow decreased. Now, free cash flow is derived from operating cash flow by subtracting capital expenditure. Therefore, we can very likely infer that free cash flow would also follow a similar trend by observing a decrease for the interim number for Q3 2021. Okay, so all this, right, we can track back to the income statement. Tracking back to the income statement, we can see that all this decrease is once again due to the increase in cost and expenditure. Okay, so after cash flow, we'll move on to the returns, especially on returns on equity and returns on assets. So for return on equity, okay, the formula is net income or earnings divided by equity, and the result is multiplied by 100%. So value investing criteria detects that it has to be more than 15%. Unfortunately for Supernus, right, their ROE, return on equity, does not fit such a bill when it comes to the Q3 2021 trailing 12 months. Okay, and this is a fail in aspect because there's such a decrease. Okay, so for ROE to decrease, similar to EPS, right, either net income or earnings has to decrease or equity increase based on the formula. Okay, now we have already established that the net income or earnings has decreased. So our main concern now would be look into the equity on the balance sheet. Okay, but for now, let's hold that thought and we'll have a quick look at the return on assets, as both of them share a similar formula. Okay, after that, we'll examine both of them together. Okay, so for return on assets, ROA, the formula is net income or earnings divided by assets, and the result is multiplied by 100%. Okay, then the value investing criteria is it has to be more than 7%. So again, similar to ROE, Supernus ROA has decreased to below the value investing criteria, and this is a fail according to the trailing 12 months Q3 number. Okay, so based on what we have discussed, right, we can look at the balance sheet for any size of increase in equity and assets. Okay, so looking at all these numbers, okay, it seems that there is a slight increase in assets and there's a slight decrease in liabilities. Okay, and this led to a slight increase in equity. So based on the formula, assets minus liability equals to equity, right? If this increase slightly and this decrease slightly, resultant logically this will increase slightly. Okay. So from that line of thought, right, we can conclude that the decrease in ROE and ROA is largely due to the decrease in net income or earnings, and to a plausible degree, the increase in assets and equity. Okay. So after ROA and ROA, the next thing we'll look at is how the company manages debt, specifically by looking at its long-term debt, okay, using its debt to equity ratio. Okay. So for debt to equity ratio, it is a measure of how much the company is borrowing to finance its operations. So value investing criteria demands that the ratio must not be more than 5%. Must not be more than 0.5. Okay, or rather 50%. Okay. In other words, in ideal case, right, the company should not be borrowing more than half of its operating requirements. Okay. Unfortunately, again for Supernus, their debt to equity ratio is above 0.5 since 2017. Now the good thing is the company has been paying off its debt as shown in the gradual decrease, and as value investors, it would do us well to see that this ratio decrease further. Okay, best that it decreased to below 0.5. Okay. Now, it turns out in 2018, right, the company has issued senior notes. So this could be the reason for the increase in debt and overall debt to equity ratio for the year. Okay. Okay. So let me just go back to the previous slide as an illustration. Okay. So you can see previous slide 2018, there's a large spike. So you want to find out why, right? It turns out that during this year, the company has issued senior notes. Senior notes is something like a bond, if I'm not wrong. Correct me if I'm wrong. Okay. So because of this, right, it's a form of borrowing, and that is why the debt to equity ratio increased very significantly in that year. Okay. So after that, we'll look into how the company future-proof itself using SCAN or SCHEME acronym. So for graduates, you'll probably be very familiar with this. Okay. So this acronym basically stands for specialized labor, competition, ability to raise price, and new technology. So for specialized labor, it's plausible that such a labor is not needed because we have established that moat is institutional through patents and through trademarks. Okay. While there is a requirement of head-hunting skilled researchers or engineers, right, Supernus has shown to bypass this by having joint development projects. Nevertheless, right, it would be good for the company when such personnel are organic to the company, and that is why it is plausible, okay, so to say. Okay, it can be a good or bad thing. Okay. Then competition appears to be manageable post-clinical trials, as evident by gross margin being more than 40%. So most of the race of all this race and competition, right, happens during the sprint to see who can develop the relevant product faster. Okay, so once victorious, right, the company would ride on the coattail of the legal protections for monopoly, and that is why competition is manageable, and that is why I include this phrase here, post-clinical trial. Okay, now the ability to raise price here is tricky because monopoly essentially allows for that to happen, but if it's priced at a very high price or it's too expensive, right, reception might be low. Okay, so pharmaceutical companies, right, tend to tread lightly on this. Okay. Then lastly, new technology definitely help Supernus, because after all, Supernus or any pharmaceutical company, right, their main way of staying alive essentially is by developing new products and new technology. Okay. So now moving on to the possible risk and mitigations, right? Okay. This is the so-called the last part. Okay. So there are 3 of them. Okay. So on the sales side, we can see that most of the sales are concentrated on 3 big customers. So should any one of them drop Supernus as their supplier, right, it is highly detrimental for Supernus. On the other hand, right, having legal protections or patents, right, essentially means that Supernus has the ability to monopolize the respective product market as long as the protection remains enforceable. So what it meant is that there is a risk that the 3 main clients, right, can drop Supernus as their supplier. Okay. However, Supernus, they have the patent protection. So if the client do not take from them, right, they have nowhere else to take such product. Okay, that is why that's what I meant, where legal protection ensures monopoly as long as patent is enforceable. Okay. Then internally, we can see that the debt situation for Supernus has tugged our sense just a little bit. Okay. Remember back to the debt to equity ratio is still above 0.5. Okay. It is high up. So according to value investing criteria, the company seems to have a bit of the debt issue. However, we can see from the chart previously that the company is managing it well. Okay, so this sort of calm our nerves a bit. Okay, do note that there is always a chance of defaulting, and this applies to all companies, not just Supernus. Okay. Then on the development side, okay, there's again mentioned early on, there's always a chance of failure, development failure. Now this development failure is commonplace in such industry, and as mentioned, this is the crux of all pharmaceutical company. Okay, and honestly, there's nothing much for Supernus to do, because failing or they cannot predict when the clinical trial will fail or when their development will fail. Okay. However, to safeguard all this, right, Supernus have a robust response system to detect early signs of failure very early on in the development process. And once detected, right, they will initiate a termination to the development so as to like a stop loss to prevent further expenditure of precious resources. So the caution is that failure can still happen very late in the process, such as clinical trial phase 3, etc., or even after granting the new drug approval. There could be some other adverse events that were not surfaced during the clinical trials, and it was surfaced in post-marketing. Okay, or that, as mentioned previously, the authorities decide to withhold granting on the NDA to the products on the basis of needing more information. Okay, so as I explained very early on in this presentation, the FDA, even though the company has submitted the necessary data and information for the new drug approval, right, the FDA might withhold granting. So this can be considered as a form of failure, in the sense that the marketing, the rights to market has been postponed. It means that the earnings and the income will probably be affected. Okay. So with that, okay, we have come to the end of this sharing session, and I hope what has been shared today will aid you in making your own informed decision. Okay, thank you.
Okay, now so right now we are going to have some Q&A, right? Maybe just a couple of minutes, right? Okay, I'm looking at the YouTube chat session. By the way, any question? Now, just to let you know that later on the second half, I'll talk about the valuation. Yeah, I'll talk about the valuation, but as of now, not yet. I'll talk about valuation. And after the break, we'll talk about the absolute valuation as well as the relative valuation. And then we also compare with some of their closest competitor, right, and see how is Supernus doing. Yeah, so I remember there was one video that I watched that the Buffett was saying every time when he buy a stock, he buy a company, invest in a company, he don't just look at the company alone, but he also want to know who are the other players in the same industry, right? In the same industry, so that is this company that he's going to put his money in, is it the best? Yeah, is it the best? So I don't think you want to buy a company even though it's good and undervalued, but it's so among its competitor. Right? You want to buy the best of the best at the best price. Okay. So any question that you have right now, we have 214, right? 214 people watching this live feed. Now, for those people who are watching this, what's going to happen is, after if you go off or whatever, you can always come back and revisit. But we'll remove some sensitive portion, like valuation, all this, we may remove it. In case you're happy, trigger happy, right? Don't go and buy the stock. Okay, Any other question you want to ask? Any question you want to ask? Okay, maybe we'll take 3 questions, right? I'm just wait for a short while. Usually the chat part, right, will a bit delayed. Don't have No question You all just wait for the valuation the signal buy or don't buy You all just wait for stock tip Cayden say buy or buy, Cayden don't buy. Don't say buy, we'll buy. This time your this kind of pattern, is it? Yeah, maybe yeah.
So this is nothing got to do with Supernus, but it's mainly got to do with evaluating pharmaceutical company in general. So we always need to pay attention to their pipeline and basically pay attention to their clinical trials. Okay. As mentioned early on when I present this slide, there's always a chance of failure. So never ever evaluate based on news that the clinical trials phase 3 got good results and all that. Try not to do that. Personally, this is what I feel like. It's always good to only validate and confirm that this is what it is to be when the FDA has granted the approval. Because ultimately you will need the authorities' approval before they can sell the product. Okay, So if let's say even though the phase 3 result is good, the FDA might not grant approval, and say like if you have bought the stock before the FDA has granted approval, then the FDA don't want to grant approval, then the whole thing tank. There's only yourself to blame lah. Yeah. So this is one thing that I always want to share to everyone when we discuss about pharmaceutical companies.
Yeah. So the Zhen Hong has highlighted one very important thing, right? So you just need to let you know that, like for example, pharmaceutical, if you compare with a non-cyclical company like McDonald's, right, it's quite different, huh? McDonald's don't have to wait for some FDA approval before they launch a meal, right? They happy can launch a meal. Yeah, launch a meal, huh? And then usually when they launch a meal, you don't see a spike in earnings per share, right? Because among all their like 20 set meals, right, they only launch one product, so it's like one among the 20. So you will not see a sudden EPS boom and then it goes up because they launch a samurai burger, right? Yeah, you don't see it. So their earnings will not be suddenly there's a one lump like go up and then flattens. Don't have. Yeah, but for pharmaceutical is how should I say? The interesting part is if the drugs eventually can be sold, and then they start selling, right? Then next year you see the earnings shoot up. So they will shoot up and then it will taper off. Because there's a new product, right? And the new product is significant. Boom, and then it go up, EPS go up, and then it will taper off. Then another new one goes up, then it tapers off. But of course, the conversely is also true, right? Everybody's anticipating, right? Then the new drug didn't appear. They appear, that everybody jump in to buy and then expecting the chicken, right, will lay 10 eggs. Then wait, then you look at the chicken, right? No eggs come out. Then you sian, right? Then you say, what do you do? No eggs come out. Then, but you already counted 10, right? So what do? You sell the stock, you'll be sian, right? Because you counted 10, the 10 didn't appear. So it's not selling, then the share price will drop. Yeah. So I think when you buy, you have to be quite careful. That means you need to take this like risk, right? Whether eventually the chicken will lay the eggs into your valuation. Yeah, in which after the break, I'll show you. So you want to like maybe increase your margin of safety, lower expectation a bit, so that if it didn't happen, it doesn't kill you, see. But if it does happen, then you make a lot of money. Okay, so let me see, there's a question, right? If FDA don't give approval, can the company still try again? I mean, they can. If you look at like our the vaccine, right? So do you realize that because the Omicron or whatever COVID quite serious, they give approval very quickly. Then booster also give approval. Then the young kids also give approval. Also you see, right?
To add to that, right? If FDA don't grant approval, right, then there are a few cases. So going back to the vaccine case, right? The vaccine case is simply because there's an ongoing pandemic. So they really have to cut short the development time and all that. And everyone is going for a vaccine. The vaccine was the way to go. And that is why even though, let's say hypothetical, FDA don't grant approval, there's always another site approval that the FDA can give. Okay, but generally speaking, if FDA do not grant approval to pharmaceutical products, right, the company cannot sell the product, or rather they cannot sell in US because FDA is the US authority So maybe they might want to go to other country to sell But similarly, if they go to other country to sell, they need to apply for approval from the country. So in Singapore's term, they need to apply through our HSA. It will also take time. Yeah.
Yeah. So that remember that's the risk investing in pharmaceutical company. So again, the risk has to be built inside, right? You see, all risks has to be built inside the valuation. Yeah, valuation. Okay, so there's one question for Daryl. Maybe I just answer on Zhen Hong's behalf. We didn't go into that detail because his question is any comparison or review in terms of performance between their drugs, between competitor drugs. No we didn't go into that detail. That we don't have. I'm so sorry, right, Daryl? Maybe the next update we'll go into that level, right? Okay, this drug, Apoquin, and then compare with Apoquin competitor. Yeah, don't have. So far we don't have. Wow, this one quite serious. This one we must hire Dr. Naresh come and present.
Actually, they can just go to where was it? Can actually just Google website for clinical trials and papers and all that.
Yeah.
If you have time to read or if you are interested in, then
yeah.
Put in a little bit of effort, search for the comparison papers. I believe that will be out there. Like in clinical trial, if they like Quilbry, right, they recently granted FDA approval. Prior to that, they'll always like benchmark. They need to show that their drug is more effective or equally effective. So there's always a benchmark. So that benchmark, they could benchmark to their competitors' product. So that's part of the clinical trial papers.
Yeah, okay, so Iguan add on one input, right? They have a lion's share of the Parkinson's arena. That's quite a big space. Yeah, okay, this one maybe we have to understand the entire Parkinson's disease market, right? Yeah, I'm not sure, do we have this information, right? Are they the market leader in terms of the Appekin?
On hand, I don't know. Maybe in the website have.
Okay, Iguan, that's a good thing, right? So I think I don't want to give a generic reply, right? So maybe the next update will give some detail. Like, for example, in the migraine space, right? Are they the market leader or at least top 1, 2, 3? In the seizure arena, like where are they? That's a very good point, huh? We'll do it in the next update. Wow, this one 2 hours, 2 hours presentation. Okay, any other question? But of course, for those subscribers who are already our US case study subscribers, in the next gathering for them, right, exclusive for them, we can go into that detail to give some assurance. For example, are they the number 1, number 2 in that area, Parkinson or seizure or whatever? Okay, good question. Any one last question? Good, right? So you can see like live feed now, we can interact, right? Don't have okay, don't have Zhen Hong, thanks for being part of this US case study live. Thanks. Okay, so yeah. Zhen Hong will knock off. Okay, ladies and gentlemen, welcome back. You know, there's a couple of second delay, right, in the YouTube, so I need to look at camera, wave, and so on, to make sure that y'all can see me, right? Yeah. Now, by the way, you know, I'm just going to jump straight into the contents and so on. While quite a number of you has already taken advantage of our so-called deal, right? Now, there's one question, I think, I can't remember from who, right? One gentleman was asking, hey, I already logged in. How come the interface look different from the one that Cayden has just shared? Maybe I just go back to that interface, right? Yeah. You know, the one more thing. Okay, one more thing. Now, the one more thing, this one, right? The interface that you see, this one, is our upcoming what? Upcoming. It hasn't come yet, but it's our upcoming. So right now, we are doing like some internal testing to see, you know, what sort of feature we can explore. But in months to come, all the subscribers, you will definitely be our first group to take advantage of this. Upcoming. So one more thing, right? And then this one is upcoming, which is the app, right? Interesting, huh? It also takes time to develop, but you know what? Let me share with you the exciting part. You know the movie Spider-Man? Yeah, before you watch, they purposely show you the clip. You know, there's one clip where I think one Spider-Man jumped, right? Then some people are thinking, hey, I thought there's another 2 other Spider-Man. You see, Sony take up the other 2. Yeah, so they show you the clip. So right now I'm showing the trailer. The trailer, right? But it's coming, it's coming. When it comes, you actually see 3 Spider-Man, right? You'll see a lot of things. Okay? So these are the things, and you realize our team member keep putting the links to remind you, Yeah. So do note that just to emphasize, do note that the app is exclusive for the US case study subscribers only. Only, Okay, so let's get started. While you are, keying in all this excitement come, and then you know that Chinese New Year, where you go outside, collect ang pao, right? Now, once you know how to invest, once you have know what to invest, when to invest, how to build a portfolio, right? Every day is Chinese New Year. Every day the stock market give you ang pao. You don't have to wait until 1 year once, right? Okay, so let's get started. Now, just now I already read the disclaimer, so I'm not going to read it again. But let me just jump straight to share with you the 2 things that I promised, right? The first thing, I'm going to do the comparative analysis. The next one, I'm going to talk about valuation, or actually 3 things. Then the last one, I'm going to talk about the options. Okay, so here it goes. Now, the company that we talk about is SUPN, ticker symbol. I'm just going to slow down my speed, right? As you click on the link, and then, will subscriber need to pay extra for this new company? The answer is no. Okay, in other words, when you download, You download for free. For free. But if you decide to join us after tonight, who knows? I may decide to maybe download $10 or whatever. But so now, bear this promise, right? You download for free. You get this app for absolutely free. Okay, fair enough, right? Now, not only that, inside, once eventually the app is downloaded. Now, we already know today is the timeline, right? And then we also give you access to some complimentary value investing training. Okay, so let's come back to here. Come back to here, right? Now, Supernus is company number 1. And these are some of the competitors that we extracted from some other website. Now, just to let you know that there is no company that will do exactly the same like Supernus. So sometimes they overlap. Some of their products overlap. Okay, overlap, right? Voila. Now, so let's look at this. Okay, let's stay focused, right? Now, when we want to invest in a company, we want to invest in a company when the company has a durable competitive advantage, so that when you invest in a company at night, you sleep peacefully. Okay, you stand by the sideline, and then you let a team of doctors or whatever work for you. Remember, when you're an investor, right? The team of people work for you. Okay, and in order for you to know whether the company has some form of moat, this ROIC must be bigger than WACC. Bigger than WACC, right? Now, I don't want to go into the technical detail, but as long as this number is bigger than this, the company has some form of moat. Now, but initially when I see this and this, then I got a bit like, how come the Supernus got no moat? Now, just take note. This number here is trailing 12 months. And just now, Zhen Hong has said during the last 12 months, they spent a lot of money, right? Doing acquisition, getting the license for new products. Yeah, so that's why the TTM didn't do so well. But actually, they do have some form of moat over here, right? Okay, on top is ROIC. Here is WACC. So here a bit not so soon because this is the last 12 months, right? But it's okay, right? So I put over here and there's a difference. So 8.8 minus 8.93, I will have negative. So we want the number to be big. So any number that is the top 3, right, I will highlight the cell. Okay? Yeah, so I will not cheat own cell, right? So I look at numbers and then I'll just highlight, Yeah. Then another way, so this is one way of determining if the company has a moat. Now another way, right, a more advanced way that's being taught in the Columbia Business School, right, that if the company has a moat, is to look at this earnings power value, which must be bigger than the book value per share. Earnings power value per share must be bigger than book value per share. So in other words, this number must be bigger than this number. So if you look at this, I purposely minus off. As long as the number is positive, obviously EPV is larger, right? So again, I highlighted the top 3 numbers, the top largest number. Let me see. So right now, okay, got 3 numbers. Now, then we want to invest in fast growth stock. Now, we want to find fast growth stock because we want the share price to go up fast. And if the share price go up fast, we also make money fast, right? Yeah, make money fast. So the last 3 years of earnings per share without non-recurring item, right? You can see more than 20% is quite high. Quite high, right? So again, I highlight the top 3. And then the net margin is very important. Now, the net margin is 14%. What does it mean, right? It simply means that for every $100, minus away all the expenses, right, they actually make $14. This is quite good. This is quite good for pharmaceutical because if you look at this, 14% is the top 3, correct? So what I did was, if there are 3 yellow cells, I'll write the number 3. If there's 1 yellow cell, I'll write the number 1. So you can see, right, the closest competitor, which is 12 companies, right? 12 companies. You will notice that they got 3 points. They got 3 points. So in other words, there are 2 companies to note. One is Zoetis. By the way, I have no idea what is this. Maybe the next case study we will do a Zoetis. And then Supernus. So they are the top. They are the top, right? So that is based on their ability, right? The sustainability and ability to make money. Okay, so that's one. Now, the next one is how about their efficiency? Now, if a company do well based on value investing philosophy and then they make money, right? We want them to make money efficiently. We also don't want their pockets to have a lot of hole, right? They owe people a lot of money. Yeah. So let's look at efficiency, right? Now, if you look at efficiency, the 3 companies at the bottom, they are really efficient. In terms of debt, right? Managing debt, quick ratio, right? It simply means, okay, in other words, if this 2.59, what does it mean, right? 2.59, that means for every dollar, right, of short-term liability, they have a current asset excluding inventory of 2.59. In short, for every dollar of what they owe, right, they got 2.59 of liquid cash for them to pay. So in other words, this means that in short term, unlikely the company will go bankrupt because a bit of cash rich. Every dollar of what they owe, right, they got 2.59. It's as though I owe one friend $1, but actually my pocket got liquid cash of 2.59. So you can see those people who got liquid cash one per dollar of short-term liability, right? You see, 3 highlighted cell. Then after that, if you look at the debt to equity ratio, right, debt of course the lower the number the better. And just now Zhen Hong says must be less than 0.5, right? Not that bad, it's quite close, marginally close, 0.52, right? This is also quite very good debt, very low debt, right? Then you see some quite high one, 1.44, a bit crazy, right? So again, yellow cell we highlighted. So 2 yellow cell, we give 2 points. 2 points, 2 points, 2 points. This fella got 3 points. So if we add the points on top of the table over here, and we add the points on the table at the bottom, right? Yeah, so what do we have? Subtotal 5, 4, 6. So in other words, if we give a ranking, the champion, right, is Zoetis. Out of the 12 companies, champion. First, and the Supernus ranked second. Yeah, among the closest competitor of this 12. Yeah? So not that bad, right? At least it's not the bottom, right? They are the second place. Okay, Now, but these 2 tables only establish among these 12 companies, they are good company, rank 1 and rank number 2. But from the angle of value investing, we want to buy a good company at a really cheap price, right? Okay, so let's look at the relative price. Relative price, Now, relative price, we look at a few things. PE ratio, but remember this is not absolute valuation, this is relative valuation, right? We look at enterprise value with EBIT. So this one, the smaller the number, the better. Smaller number, that means cheaper relative to the peer, right? The smaller the number is better. And PEG ratio, we want to be less than 1, okay? So if you look at the PE ratio, all these numbers are pretty small. Yeah, relatively, they are cheap at one point in time, price to earning ratio, right? Yeah, so EV to EBIT, all these are relatively lower as compared to other companies. If you look at this one, a bit ridiculous, right? PET IQ 77, PEG ratio for fast growth company like Supernus, we want it to be less than 1. So you realize that there are only 2 companies that pass. Yeah, so we give them the points, right? Give them points, So in terms of whether a company is good, Supernus is ranked second. Okay, where the company is relatively cheap as compared to rest, they rank number 1 first. But of course, there are 3 first. This one also first, this one also first. Okay, so what's the conclusion, right? The conclusion is the company is good and is relatively cheap as compared to the other 11 companies, relatively cheap. Okay, so that meets the fundamentals of value investing. Okay, but that's not the end, right? That's not the end. So now, talk so much and so on. And then from a value investing perspective, like the entry point, right? The entry point. For the entry point, we cannot look at relative because PE low, it doesn't mean anything. We need to look at the company's intrinsic value. Okay, ready? Li Min says Zoetis is pharmaceutical for livestock and pets. Okay, so maybe not so relevant for us. So if I take that out, maybe they are not their closest competitor. Yeah, so Li Min, thanks. Now, so let's look at this. This is Morningstar, right? This is not my opinion, right? Now, I have no idea what's the algorithm behind Morningstar, but they have, they got their own way of calculating intrinsic value. But anyway, based on Morningstar's intrinsic value is $33. Right now, before the stock market open, right, as of this afternoon, it's $29. Yeah, so about maybe $4 cheaper. Yeah, so based on Morningstar, right, it said that it means that if you buy the stock today, you are buying at a 10% discount. Okay, so the 10% become a margin of safety. Okay, so that is for Morningstar. In short, it's undervalued by 10%. Okay, now, so let's look at Guru Focus. Guru Focus is another website, right? Now, this black line is their intrinsic value. Okay, this blue line is the share price. So right now, the blue line is below the intrinsic value. That means it's cheap. But let's look at the exact price, right? Yeah, so the intrinsic value is 33. Hey, do you realize that Guru Focus and Morningstar, usually the number differs, but interestingly, for this company, it's about same 33. So you keep this 33 in mind, right? And the share price is about 30. So again, it's about 10% discount. Okay, now if you want, maybe you take a photo of this or a screenshot of this, right? So you have the the intrinsic value. So this is an external party one. This is not my opinion, right? Okay, ready? I'm going to show you mine. Now, just to let you know that how should I say, right? I never bought any stock in my life, right? Based on Morningstar's intrinsic value or any other company's intrinsic value, or analysts go and send me one report, you know, and then I buy stocks based on their intrinsic value. Never ever. And I didn't do it is because in the initial days, when I say never ever is when I go into value investing. So in the early days before I venture into value investing, right, I anyhow go and follow stock tip, right? You say what's the intrinsic value? Oh, 30, then you go and buy 30. This is one of the most dangerous things. Yeah, because nobody has ever become wealthy by following other people's opinion. Yeah, so let's come here, right? Which is why even though when we do this US case study subscription, we still want to educate you how to use. Like for example, recently I brought my two girls to go and see dentists, right? Yeah, dentists. I mean, eventually both them need braces. So the doctor say, you know, let me educate you how to brush your teeth. You know, something like that. Yeah, they will clean the teeth for you. Yeah, but they still want you to learn how to take care of the teeth, right? So same thing, right? We do all this analysis work for you, but you also need to know what is happening, correct, huh? Now, so ready? Let me talk about our valuation. Now, this is the screenshot of the company's EPS. And if you look at the first 3 years, you know this part, right? It's quite erratic, It's quite erratic. And it's common for a fast growth stock to look like this. So in other words, for a fast growth stock, right? If this is the zero line, if I put zero over here, there are only two possibilities. One is the first few years lose money. Amazon is like that one. Tesla also like that. Then after that, the share price shoot up. Choo. Yeah, because fast growth, right? Choo. Okay. Now, then, or sometimes they are very marginal. You know, they make money, sometimes make money, sometimes don't make money, and suddenly pew, goes up. So you realize that the make money zone, right, is this zone. Only the last 5 years. Yeah, so we want to ride on this like momentum, right, when a company is growing. So this is the intrinsic value, right, at least from my perspective. Yeah, so I put this 0.28. This 0.28 comes from here, 0.28, right? And then this 2.36 come from here. Now, bearing in mind that in this 2020, and just now Zhen Hong has already reminded, no, 2021, it may go down, you know. Yeah, it may go down, So in other words, I need to put some buffer, right? And I already know that it's going to go down because the company is making some acquisition. So you realize that in the past, if it's 53%, but I'm a bit conservative. I didn't put 53, I didn't put 40, I put 10. And the reason why I give a large discount at this stage, because I'm going to assume that in future, right, maybe some drug approved, maybe some drug not approved, and so on. So I'm quite safe. So at this stage, I really put in a buffer of safety, just in case I make a mistake. Buffer error, right? Okay, then I assume that the company will grow 10.1 for 10 years, and then there's a discounted rate of 10%. Yeah, then subsequently they only grow at 10, and then eventually they stop growing at 10. Then after that, they die here, right? So 10, 10, And then not only that, I put in a 30% margin of safety. So here there's already a reduction in a future growth rate to add as a buffer, right? And then subsequently, I add in another buffer. So there's 2-layer buffer, 1 and 2. So I'm highly conservative because number one, at my age, I don't think I want to lose money. So eventually, I came to an intrinsic value of 27. If I round up to a full number, right, which is US dollars, it's about 28. 28, right? Now, so if I go back to other people's intrinsic value, yeah, so mine is about 28. Mine is conservative because I don't want to lose money, right? And other people's one is about 33. 33, Now, bearing in mind that my 28 has a 30% margin of safety, okay? So the share price is about maybe 29. Later on, when the stock market open, I'm not very sure what will happen to the share price. It may go up or go down. But if you are like me, right, let's say you are quite conservative, yeah, that means this 28 is very close to 29. 29, right? 29, So you can interpret as slightly overvalue or it can be fair value, okay? But let's say at 29, you don't feel comfortable buying. You die 128 and below. So what can you do, right? Okay, so this is the exciting part, Now, then we look at the option chain. So in other words, if you are a graduate, you can sell put option, right? And put the strike price at 28. Yeah, so that if the strike price hit 28 or below, right? Yeah, the system will auto buy the stock for you at 28. And then you get paid, put premium, right? Now, so this is Supernus, this is the option chain. So you may notice that Supernus doesn't have any weekly option. Now, if Supernus doesn't have any weekly option, It simply means that usually these stocks are not, inverted commas, are popular among traders. Because, you know, like Facebook, Tesla, all these, they have weekly options. Don't have. Don't have, Don't have, right? So, this afternoon when I log in and then I look at the option chain, I realize that numbers are not so accurate. It's okay, I'm going to log in right now, right? And then I'll show you some of the numbers. So right now, I think it's about 9:55, we're not going to do until 10:30. So, but I'm going to show you how you can calculate the ROI so that when the US market opens at 10:30, right, you know what it means, right? Okay. Okay. With that, right, we'll come to the end part, right? And now, in case you're not our graduate, you do not know who we are, if you look at this slide, you realize it's red, right? So maybe it's just a coincidence that I chose red as our corporate color. Oh, Dominic, thanks. Yeah, corporate color, right? So you can see our logo over here. You know, like DBS like that, Our logo over here, right? And then this is our tagline. We want to come up with some funny tagline, right? So we call it VIA What Me Please. Very funny, One of our ex-staff did this, right? And of course, the one that's more inspiring in VIA is to grow via VIA. Interesting how there's that pun, right? Yeah, so I'm just going to end the session. Oh, Daniel, the file, right, that you're going to see is not going to be the Excel format because we convert to a PDF. So don't worry, once you go in tomorrow, you give us like overnight, right? So my staff sleep over it. Tomorrow night, we will send the PDF file to you. PDF file, right? Yeah, PDF file to you, Yeah, so I'm going to end session. Just remember, we are VIA, and VIA stands for Value Investing Academy, and our mission, right, in life is we care to make you a better investor. Okay, so good night.